Hey there, Tamir from Fibonacci-Traders.com here. Stock market daily recap. Let's see what SPY and Friends brought us today. October 12, 2023. SPY with an engulfing candle. 432 to the downside. Very important area of support. Was a very tough resistance over here. Now, by natural things of price action, very important area of support. We entered the gap at the 438.40, but it is still open. Let's see where SPY can close the week. Tomorrow, Friday, can we close the gap? Close at the 439 area, above the 618 area, and then with high probability, next week we will see 444 to the upside. So stay tuned. It will be a very volatile October continuation. As we said, end of September, October is known for its volatile price action. QQQ holding above the 369 area. This purple trend line, very tough resistance. Once again, if we go to the line chart and we adjust to the high, lower highs, now go back to candles. What do you see? Once again, this purple trend line during hours rejected price, went back down. This is the 5th time attempt. Let's see if the weekly can close above this purple trend line, and 374 will be the next. Dow Jones also engulfing candle, 336, 335 area, very important area of support. It was support over here. It was area of support over here. So now also holding a support. Let's see where price of Dow closed this week. Closing above the 336 will be a very interesting trigger for bulls before the next leg up towards the 344, and this yellow trend line, all this area, the 344 together with this yellow trend line, will be a very tough resistance for bulls in the future. IWM, very nasty day, 2.3 to the downside, back to this area of support, this red zone. We know this red zone. We drew this red zone. We marked it few days back, few weeks back even. And since, as you can see, take it all the way left, all this area, since May of 2022, 1.5 years already, almost. This red zone is a very important area of support, breaking down and under, and we are going south to the 156. We have an open gap over here. So watch out. If you are a bull on IWM, this is not the time to be a hero. There is a big difference between trying to catch a falling knife and trying to buy the dip. There is a big difference because the dip can get much deeper. Bitcoin, slowly going back to the 26 area. We have head and shoulders on a higher time frame. We have a head and shoulders scenario on a lower time frame. So it's all about bears land on crypto land, also in Ethereum, back to the 1536 now holding, but not for long, because it looks like also on a lower time frame we are heading south. Below the 1460 we will see this red zone getting retested once again as support. KRE, downtrend until proven otherwise. Nothing much to say, just follow price. Look where price came from, where price is now. This is why we use trend lines. Trend lines, they are our GPS for future price action. And as long as KRE is inside between these two trend lines, aka channel, downtrend channel, don't be a hero. Don't try to catch a falling knife. You will cut yourself. Crude oil inside this red zone. This red zone was a very tough resistance. Now became very important area of support. Breaking below it, 77.70, all this area will get retested once again as support. Also, it was a very interesting area of support, resistance, support over here during end of August. Now, breaking below this red zone, we are heading back, retesting this green line, SOXX. If you follow me on Twitter and you saw previous videos, you know these trend lines. And once again, trend lines, one day after another, proves us that they are true support and resistance. And furthermore, our map for future price action. No need even Fibonacci. No need any other indicators. All these indicators are truly, and all of them without any exceptions, are lagging indicators. So don't put your trust into lagging indicators. If you don't trust me, do your own research. I am a full-time trader for the past 7 years. In the first 2 years of my journey, I took numerous courses, paid services. I went through hundreds and hundreds of indicators and strategies based on those indicators, on those lagging indicators, until I found, it took me 2 years to found the trend lines, gaps, ATR, and of course, Fibonacci. This is all we need to really understand with high probability where price might be heading next. Now, doji of a trend line, get ready for a trend reversal to the downside, unless we will close the week above the 492, above this trend line, but more likely that we will retest the 478 and maybe the 468 before the next leg, trying to get back and breaking this trend line over here. It will do something like this. This is my scenario. And then next leg towards here. But this is my scenario. We are not here to try to predict the future. We are here to follow price, learn in-depth candlestick analysis, aka pure price action, and how price react and how price follows trend lines and Fibonacci. Check the links in the description below if you want to take your financial freedom in your own hands and really become a professional trader, a professional risk manager. Stop following others to tell you what to do, what to buy, where to buy, what to sell. Stop following these lagging indicators. They all give you the past. We don't need to know what happened in the past. We can look left by ourselves. All we want to do is know where price might be heading next. Natural gas futures, NG1, another great example of why trend lines are the true support resistance for price action. You know these trend lines because you saw previous videos in the past few weeks or so, and we said that this trend line will become a very tough resistance for price action for bulls of NG1. Now, slowly, bulls are giving up. And once they will give up, we will see the same price action we saw here to the upside. We will see the same price action to the downside, retesting the 3 area, this green line. And if price will fail to hold this 3, we will see this gap at the 266 getting filled. Why do I know it with more than 99% chance? Because I look left and I see that there are no open gaps on the NG1. Apple. Once again, I sound like a broken record, but this is it. Price action and trend lines. You know these trend lines. And what did we get today? Doji of a trend line. Price tried during hours to break up and above, got rejected, and closed below the trend line. Now, a doji of a trend line is the most significant signal with the highest probability that a reversal is incoming. Now, 179 needs to hold. We can take Fibonacci, swing low, swing high, where price might be heading next. First, 178.70 needs to hold the support. It was resistance. Below it, 176.60. And then retesting this middle trend line together with the 174.90. If, and it's a big if, less likely it will happen, if price will manage to close above this yellow trend line, above the 182.32, next week we are heading towards the 186, 189, 190, and then 192. We can be more accurate with the Fibonacci from here. Downtrend, bounce, 50% retracement, trend line, doji. That's it. This is all we need to know. Nvidia, another doji. Doji all across the board, which means some kind of a pullback will happen. Nvidia still in this steep uptrend. The steeper the angle of a trend, the more likely this trend will break. And here we have a very steep uptrend since low of September. This high probability it will break, retesting the 441 before the next leg up, if the overall sentiment in the market will allow it. Otherwise, we are heading south to the 426, 408, and closing this gap. This gap needs to get filled. More than 85% chance all gaps will get filled. Amazon, doji, not surprising. Let's be more accurate, a little bit more accurate with our Fibonacci. And once again, it's technical analysis. It's not rocket science. It doesn't need to be an exact price. It's an area of support, area of future resistance. We had a downtrend, bounce. Now, almost closed this gap, but did not close. Why? 50% retracement, rejected. Amazon bulls, doji. Let's see, Amazon needs to close above the 131.25 area, close the week. Otherwise, next week we will retest 128 and then back to the 123. Meta trend lines. If you follow me on Twitter and if you see our pre-market preparation show live every day, 8:30 a.m. Eastern Time, we have talked and explained this trend line. This trend line goes way back to April of 2023. Resistance, resistance, support, resistance. Now, in the past 2 days, once again resistance. Some kind of a pullback to the 318 will be very healthy. Even to the 313 will be very healthy. The 313 from support, resistance, broke up, retesting this trend line as resistance each and every time. Price tried to break above, touch this trend line, got rejected, rejected. Now, with high probability, what will happen? Price got rejected, retracement, 318, 313. All we need to do is not guess. Follow price to the downside, and these are your future support. Google, we can do like this. Be a little bit more accurate with our lines. Go back to candles, and what do you see? Same scenario, same price action as Meta. This trend line, support, 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 got broken to the downside, gap got filled, We know that more than 85-90% gaps will get filled. Now, this trend line, resistance. Follow price. Use trend lines and Fibonacci as your map for future price action. I sound like a broken record, but believe me, you don't need to believe me. You need to do your own due diligence, but this is what I did in my first 2 years on my trading journey. I looked for the best. It's not an indicator, but let's say for the purpose of this conversation, I looked for the best indicator that will show me where price might be heading next. I don't need to know where price came from because I can see by myself where price came from. I want to know where price might be heading next with the highest probability. This is when I found trend lines and Fibonacci. Microsoft holding strong above the 328, but below the 334 area. All this area, very important area, as we can see, since May even of 2023, price bounced back and forth inside this area, the 328 and the 334. Let's see, can Microsoft close the week above this 334? Will be a very bullish scenario from Microsoft. AMD staying strong, relative strength to the rest of the market, holding another day, another doji, but holding above the 107.30 area, above this green line. You know this green line, we talked about this green line in the past few weeks, and we said we want to see a weekly close above this 107, 108 area. And once again, another great example of why trend lines are the true support, 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 broke to the downside and got back, retesting this same trend line as resistance. But as long as price is doing like this, it's on its way up. It's a good resistance. There are good resistance. There is such thing as a good resistance. This is now a good resistance. Why? Because it shows me the resistance of the higher highs, and higher highs, this is what I'm looking for if I want to go long. And if price will break up and above this trend line and will do something like this, it will hold, it will hold the higher lows, which means, once again, it's a good support. Higher lows or higher highs, it's the definition for an uptrend. Tesla, after getting rejected once again, third time, 3 times, Fibonacci number got rejected. Now inside this purple zone, this purple support zone, we need a weekly close in this area. So next week, bulls will have enough power to break up above and continue this sliding, this slowly climbing, not sliding, climbing up on this purple zone towards the 290. Shopify getting rejected one time after another from the 55, 56 area. Now looks like it's going back to the 51. Or if, and it's a big if, because all the market looks like needs some breathing. Bulls need some breathing, some rest for the next few weeks until the end of 2023. 2.5 months. We need a weekly close above 454, and then maybe next week we are heading towards this gap and this gap. But for now, sideways move on Shopify. indecision, Shopify between the 51 and the 56, long only above 56. Netflix continue it sliding down on this purple trend line towards the 342 area. The 342 gap must get filled because looks like bulls of Netflix are nowhere to be found. They are very weak, very tired. So we need this gap to get filled before the earnings next week, October 18th, Netflix earnings. Let me know in the comments below, what do you think? Will Netflix close this gap before the earnings or after? And it doesn't matter. What do we think? It's just interesting to know. What do you think? But all we need to do, follow price, use trend lines, Fibonacci, gaps, and ATR, and that's it. Sounds a lot? No one said trading is easy.